Stock market analysis and projections on the S&P 500. Some important information that you need to read. This is about our approach to the market and about you and how you use the information that we provide. And the real key thing is about trade ownership. You see what we do, what any professionals show you, you need to take ownership of the trade because nobody's going to help you get out of it, and you need to know how to manage your own risk. So really important. Please do read this page. Okay, stock market analysis on the S&P 500. I'm going to look at the weekly, daily, and 2-hour charts. If you want to see our full analysis on all the indexes, you can actually get our charts in static form with Matt's commentary in the SIR Daily for level 1. So please do sign up for level 1. It's not expensive at all. It's $45 for 3 months. So please sign up for that, and you're going to get our information on all of the indexes that we do. So please consider that and go to our website, askSlim.com. All right, let's switch over to the analysis as I look at the chart of the S&P 500. So this is the S&P 500 SPX, and on the left is the weekly, and on the right is the daily. If you're brand new, this is cycle analysis. So we are one of the few websites out there that present cycle analysis. Our team is expert in this type of analysis, and you can learn more by going to our website. Go to the workshop tab, click on cycle analysis workshop, and there's a free video on there. It tells you all about that, and I think you'll find that very interesting. Let's open up the weekly analysis in here. And there is a slight change. I talked in the beginning of the show that I had put out a special video this week which explains the slight lengthening out in the cycle patterns that I have here. You got to watch that. It's a Tools for Text for video that we posted up on YouTube for free, which is very rare for us to do that because we thought that the value was so good and that we wanted you to get exposed to the work that we do. A very unique charts that you'll see there I have never shown before, so please do go see that in our YouTube channel at askSlim Team, and you're going to find that information, well, mind-boggling. Let's take a look here at what's going on. So you see this grayed out. We call this a ghosted cycle, and we had looked for the market to peak somewhere out in here in the resistance and then come down. And our trough, our average trough where that low was expected, was around sometime in April, potentially early May. So we thought that the declining period would be sometime out in here, March, April. Now that is extended out based on the fact that these cycles have widened a little bit, and that takes it out to sometime in May. So you can see these blue lines. This is end of April right over there to the end of May. This is the timing range that we have for the trough. It could peak any time in here and then get into this period of risk for decline. All of these yellow areas are where periods of risk come in. Why are they called that? It's because the cycles, when you have an alignment of minor, intermediate, and even longer term cycles, that's where there's profit taking, liquidations, and the bigger cycles are the longer ones. They're the most dominant. Also, you can see that there's alignments of momentum conditions that change. So right over here, you could see negative momentum warned to us about a cycle peak, which was very accurate right there. Here's where you had positive momentum warning us about a cycle trough, and that was fantastic information. This is the Reversal Scout. It's unique to our website, and this tells us that upside momentum is still strong. There was a hanging man right over here, but those little signals have tended to not confirm. And as you could see, the market continued to move up. Now these lines right over here, and let me just get a little closer look right here so that you can see that. These lines right over here are the resistances that come off of the monthly charts. There's the monthly resistance confluences right over here. This is the dominant fib 127 right there. And then you could see other extensions from the daily chart and from the weekly charts right in here. This is what we consider extremely thick and important resistance area. Now, our upside projections, as I said in the beginning of the show, were only to get up into these areas right over here around 2050 towards the end of the year. We thought right in this part of the year it would come down sooner, but AI and NVIDIA prevented that, and that it would go into the correction here and then move up again to higher levels here out in the fall. The timing has not changed, but the numbers have changed, because as this moves up, it moves up the support levels. And as it gave us the information that it's important to widen the cycles by a minimal amount, that then tells us that the trough is likely to come out here in this period, sometime in late April to late May. So we've extended that. Now the corrective levels right over here are 48.76, which would be, only around a 4% correction. That is unrealistic. It's much more realistic that the declining numbers are down over here, 47.25 approximately, even getting down to this spot right over here at about 46.10. So 46.10 would be approximately a 10% correction. We're not really looking for that because we think the depth of the strength in there is too much. Also, this 34-week moving average, which is often a test, would take you up into this area of about 47.25. So 47.25 is much more around the 7% level of correction. And that's kind of what we're targeting here out into May. So our analysis has slightly changed because as it moves up, it raises targets, and it's widened out the cycles a little bit, so that tells us that it's likely to be, the trough is likely to be a little later. In other words, when the bottom of the correction comes. But the correction is likely to be out over here in March and April, and at sometimes it may look like it's falling very hard. So that's important. Also, our VIX analysis aligns up with that, which says that there's likely to be big increases in implied volatility during that period. Let's switch over to the daily chart, and you can see in here as we look at this that there are, let me just get a little tighter look right over here. This area up there of the resistances over 5,200, it has to get through some very tough resistances right now that I showed you on the weekly chart, and I'm showing you here now on the daily chart. So this level right over here again, just around 5,100. Which we got up to 51.11, as you can see, and then it started to get a little sloppier here today. This is 51.30, and this level right over here is 51.50, and that's really what we could see the upside getting to if the market does stay strong. The key support right over here is 49.20. And it really needs to break that to give us an indication that this weekly chart has turned over and it is in the correction here. That would be the important number. It didn't change from last week. What happened was, you can see it tried to get down here and break down, but it couldn't, as then the NVIDIA news came out and moved up. This is the slim ribbon PO on the bottom. This is a level 4 indicator. It is phenomenally good. And when it's green, it tells you that the slim ribbon is in a bullish configuration. Momentum is strong. And when those arrows come, it tells you it's warning of upside resumptions. When it's negative, and I can go way back over here where it's some time period where it's negative, well, you have to go pretty far back to see where it's negative. Oh, wow, I got to go all the way back over here. You can't even see that. So you can see that the value in here is that it tells you when the market is positive, it tells you when the market is negative, and you can see that the market has been quite positive through this whole period, the slim ribbon telling you that right in here. And it is now in the upper channel right there. Everything about this analysis has been positive. We have not been shy about that. No matter what I call for a topping in the market or where I show resistances, the important thing is understanding market condition. And that's what we show you all of the time, because we want to make sure that nobody is shorting in front of super strength that you have right over here, because we want to let the market tell us when that's happening. Now, we use some intraday information to help us with that also. So again, here's what we're looking at right over here as we look at the S&P 500 weekly and daily. Everything strong, momentum strong, all of the indicators strong, and no reason to be expecting anything other than upside until the market tells us differently about that. So now what I want to do is go over to the 2-hour information, and then I'm going to show you our indicators, and you'll be able to see the value of that. So this is a 2-hour chart in here, and this breaks down the daily chart into smaller pieces and the cycles in here. So what you see in the bottom are the cycle brackets, and then these lines are showing you the actual what we call configurations or translations in the cycles. You'll learn about that in our cycle analysis workshop. Now, if this is the ideal situation, if there were no upside and downside pressure, it looks like this. But when the upside pressures are bigger than the downside pressures, it looks like this, as you could see. So there's a lot of upside pressure that slants these to the upside. This is what the cycles look like with upside pressure on them, and this is the actual trading of the market. And you can see the cycles in here. These dark lines are where the daily cycle troughs came, and you can see that a daily cycle trough came right over here. That's on the daily chart. And that this cycle right over here is still rising as our projection. It's pretty obvious that when this corrects, and this looks like it's going to correct out into sometime next week. This is the 27th. This is the 28th. We would expect on the 27th or 28th a pullback to be complete in here. So it would come down right over here. Let's get a closer look, and you can see that. So we're going to look for a corrective period right over here and pull back sometime into next week, and then moving up again. And the question is, when will this then be giving us signals of the market moving down? Well, it would take a movement down that breaks that trend and a lower low, something like that, that then tells us on the 2-hour chart that there's a topping going on in the daily chart. So we're going to look at the 2-hour chart and the daily chart and be able to figure out when the market is actually telling us of a problem. Also, you can see we have the slim ribbon on here and the slim ribbon PO, and we're going to want to see those turn red in order to give us an indication that the market is turning weak. Right now, this is very clear. It is giving very clear upside signals in here as we look at it, and nothing is changing in there. Extremely positive. So that's the 2-hour cycle analysis, which is a breakdown and lives inside of this daily analysis, and this daily analysis lives inside of the weekly analysis, and that is a picture of what multiple time frame analysis looks like. Market still in great shape. It has not changed, and again, I'm going to repeat, no matter if I say that there's a peaking due or not, we look for the indications that it's actually happening. In the meantime, everything looking very strong. Part of what helps us get those indications is when we look at our market condition monitor. So this is our algorithms programmed into our application. So what I have on here right now, I'm looking at the short term, and let's just get a little closer look in here as we get this to scroll down here. Okay, so what we're looking at here is the S&P 500, the QQQ, the IWM, the diamonds right there. And you can see as I'm looking at the short-term reading right over here, which includes breakdown of weekly, daily, and 2-hour, that we have the conditions that have been bullish in the S&P 500. But now we've got a little bit changing in here as there's been some weakening on some of the indicators, and the QQQ is only slightly bullish. At the same time, the IWM, which is now showing weakness, and the 2 hours is turned to neutral. So we're getting some little warnings here on this short-term indicators right over here. If I want to look at the near term, which is really only giving weight to the daily 2 hour and 15 minute, you can see in here that there's some neutralization going on. So if you were a intraday trader, you'd want to be looking at that. But for people that look at weekly and daily, you're going to be really looking at this one on the short term. I want to go to the time frame mode right over here, and you can see the slim ribbon, and this is the 2 hour readings in here, and you can see that the IWM has really been turning weak. It's not giving you good readings at all right there, but the S&P 500 and the QQQ and the diamonds are all giving you strong intraday readings. You can go in here back to the daily chart, and you can see in here that QQQ is starting to give you some weakening right over there. And overall, it's still quite positive. I'm going to go back to the trader version because I want you to see that we're looking at in here that overall the market is still pretty good. But I'm going to look at some trade conditions right over here. And you can see in here as we scan that you can see the ones that are in very bullish condition, looking at the short term. And you can see that when it starts to change, you'll start to get the 2 hours tipping over first. And these are all very bullish, as you can see there. So if you were trading, you could see NVIDIA there, very bullish. You would want to really see this information because you don't want to short anything that's very bullish. You don't want to buy anything that's very bearish. And you could see how many in here are very bullish as you look at that. Now, if I go back to the top and I go to the trade setup condition and I go to very bearish, again, on the short term, if you're a fairly active trader, you're going to be looking at the short term here. And you can see in here, it is really the golds that have been, or the metals that have been bad. Boeing, you look at that. That's one of the key stocks. That one is very bearish. It would have kept you from buying it under these very weak conditions. Corn, soybeans, there's the SIL, which is the silver miners. Roku, I mean, that one looks very bearish in there, and you can see that you would have stayed out of trouble. PayPal, that's an interesting one because Square is up huge today, but PayPal is not, and it didn't really follow it at all, and that's been a pretty bearish stock also. Deere, the banks, KRE, Shopify, these are stocks that have been bearish and the ones that, if you were a trader, you really would not want to be buying. So I kind of wanted to show you that, where you can see how you can really look at these conditions in here. Really valuable, I think. And looking at the stock market, you can see here that this is telling you that there is likely going to be a notification of change when these start to change, and we want to look at that. So I could be looking at the near term right over here and wait for those changes, and you can see that, well, on the intraday basis, they are weakening again. So maybe there's something changing in here, but I want to keep my eye on the short term. As I look at that, I want to keep my eye on that chart on the that I showed you, the intraday 2 hour chart. Those are really valuable. And overall, let's just, the summary of what I just showed you is the weekly and the daily and the 2 hour chart on the S&P 500 are all aligned positively. They've been bullish for a very long period of time, and our analysis has been in alignment with that. We are expecting the market will peak and go into a sizable correction that will likely take us into May. You could see all of those other indexes by becoming a level 1 member. You'll be able to see that in our SIR daily. So if you're interested in the other indexes, you will then be able to see those charts. Correction out there, but not yet. The market will tell us when. Please do subscribe. And if you become a level 3 or 4 member, you can have the MCM, the Market Condition Monitor.